Now, Tencent's newest mobile game, Dungeon and Fighter, is driving up Naspers and Prosus shares, indicating a positive shift in sentiment for Chinese tech stocks. Additionally, this marks a promising turn for the industry after recent challenges. Joining me now to delve into this further is technology correspondent for the Business Day, Mudiwa Gavaza. Mudiwa, always a pleasure and a good afternoon to you. How are you?
Greetings, Nolutando.
How are you, Mudiwa?
Alive, good, well, and thriving.
Brilliant, Mudiwa. Always a pleasure having you here. Let's talk about this rally in Tencent and Naspers that we haven't actually seen in a while. Yep. Actually, behind Prosus and Naspers, all of it on the back of Tencent. Let's talk about that.
Cool. So the last couple of years have been interesting for Tencent, which is the major driver for the Naspers and Prosus share price. To be fair, Naspers in particular, both of them have done pretty well in the last half year. Their share prices are actually up quite a bit, but this has been another push. At both of two of the biggest pushes, at least in 2024, have come from Tencent and China's stance on gaming. We saw it earlier in the year when some of the rules around possible, spending restrictions for games were taken down from the regulator's website, in China. I think you and I spoke about that at some point, and then we also saw it now recently when there's actually movement on the ground. The new game is coming to the market because there's just been a lot of uncertainty around the release of games, when and if things are going to be published. And if you're the biggest gaming company in the world, then this is a big piece of business. So when investors see movement, positive sentiment returns to the market, and we've seen them, going up quite a bit. 13% is a lot for a company like Tencent, because depending on what market cap you're looking at, and I say that because we've noted that people have different valuations on Prosus, for example. People, are a bit confused around how many shares are out in the market for Prosus shares. So Tencent in particular, 13% rise is a lot of money. That's at least $40 billion that's added in market cap. When you have a 13% rise, and some of that then filters down to the Naspers and Prosus level.
Another interesting part of this, Mudiwa, is just how big this global gaming industry is and what it means for Tencent to be one of the biggest players in the world, and the Chinese market to be the biggest market in the world. Help us contextualize this one.
So we're not talking about one-off. We're talking about the biggest.
Okay.
Tencent is the biggest gaming company in the world. Crazy. A couple of years ago, I would have said one of the biggest, but it seems that they have continued to grow. The measure that's being used is that they're the biggest by revenue, right? Specifically, there are a couple of big gaming companies in the world. We know the usual ones: Sony with PlayStation, Microsoft with Xbox, Nintendo, all of those. But with Tencent in particular, they own a number of very popular titles around the world, including PUBG. They own, two of the biggest gaming studios in the world. That's Riot Games and Epic Games. Epic Games makes Fortnite. So anyone who's ever spoken to anyone who's into gaming, you know that Fortnite is a huge game, around the world, and you can draw that, that line, into the Chinese market, as well. And then the other piece of that is the fact that the likes of PUBG, the likes of Fortnite are looked at as, these are international games, right? Because, these are Western-based gaming studios, but, they have Tencent as an owner. But in China itself, China is the biggest online gaming market in the world, and once again, Tencent is the biggest player there. So it is a ridiculously huge business. I remember a couple of months ago, I was laughing with one of the ladies in communication, older lady, I think in her 50s, and we're just laughing about the fact that when we were growing up in the 2000s, when she would have been raising someone who's about my age, we were being told that video games are a waste of time.
Yes.
But now it's a whole career, it's a whole industry, and this is something that's actually adding at least in South Africa, to people's pension funds in the form of Naspers.
Absolutely, very interesting. I actually have family friends who are paying for their varsity fees through gaming. Very interesting there. Another one, though, we must talk about here is the uncertainty around the Chinese tech market here. So, of course, we are seeing these very handsome gains, and we are seeing investor confidence returning here. But there's still the chance that at some point the Chinese government could crack down on this again. It has had these draft rules, which means somebody's thinking about it somewhere there. But it looks like investors are keen to get in on the good news story at this point.
To put it mildly, I think the Chinese government and the word transparency are a bit ambiguous, to each other. And I say that simply because, as you noted at the beginning of this discussion, when you were introducing, you said indication. And that's literally all it is. And it was the same earlier this year when they took down those rules from the website. There's never like an out-and-out announcement around some of these things. They will crack down, right, and put down the rules and say, these are the things that we're suggesting, or these are the measures that we're putting down. And we've seen what happened to the likes of Alibaba. Look at the Alipay listing, all of that stuff, right? When it comes to where they stand, they never really, say anything. So the market usually takes the signs that it gets. You're sort of forced to read into the tea leaves. So in this particular case, the signal is, okay, Tencent is releasing a game. That must mean that there's been, something is happening between whatever Tencent and the government are, talking to each other. Surely this means that the government is either softened its stance or has at least allowed Tencent to move forward. As long as there's progress as a market, positive, this is good news, the share rises. That's the, I guess I don't know, can I say unfortunate part about having a company that's based in China? You sort of have to be interpreting into each of the moves to see if there's anything there. And for now, the market has said, wow, that little move is worth over $40 billion.
Certainly defying the old theory that market participants love certainty, Mudiwa. Let's talk also then just about the Chinese tech industry. Of course, we know that these crackdowns are on and off, but other than that, Mudiwa, has the sector been able to recover in a more maybe straight line basis versus the rest of the economy? We know the rest of the economy is seeing a bit of an uneven picture here, but the tech industry seemingly okay for now.
Tech industry, as far as we can see, seems to be quite all right from what we can tell. When we were doing our piece this weekend, we actually took a recent analyst note from Sanlam Private Wealth, and I think what their position is sort of largely encapsulates where a large part of the market is, despite some of the haggling or some of the inconveniences of operating in China. You still have a company like Tencent that has over 1.3 billion users. You still have a Chinese economy that is growing, albeit slower than it has in previous years, but still growing. You still have a growing middle class. In that particular country, you have high smartphone adoption, and at the same time, you also have a country that is technologically forward. So you've got a very healthy tech sector. Now, the question is just more about what is the national agenda around, that technology. When you look at the debate around TikTok, for example, that kind of shows you where we sort of sit. Because in the rest of the world, you look at TikTok as an entertainment platform and all that. But in China, right, I just forget the official name of TikTok in China. But on that platform, they have measures in place where they have to have a certain amount of educational content flowing through that particular platform, right? So big tech company, huge user base, but different in terms of how the regulators are looking at a particular platform. In the US, you're having an ownership debate, right, around TikTok. But in China, it's what content is flowing through this huge channel. So I think that's where, you know, I would say things are at the moment. Look at a company like Huawei. Right? Huawei has had all the restrictions that the West could possibly impose on a company, but somehow they're still able to surprise the West by releasing, you know, phones that have chips that are more advanced than the Western world thought that they had. So I would actually stake a claim to say that I think Chinese tech is still quite healthy, at least in the medium term. They will continue to have this tussle with a country like the US. Chips are going to definitely be a huge thing that we'll all be watching, you know, going forward. And this AI thing, right, is just going to be something else that we all need to keep an eye on.
Interesting times indeed ahead, Mudiwa. Thank you so much for your time. That was technology correspondent for the Business Day, Mudiwa Gavaza.